Okay, what is up, tycoons? What's up, traders? Super excited for today's video. Going to cover natural gas. All right, we're going to take a look at UNG. We're going to cover the leverage ETF Boyle, as well as look at the actual spot price of natural gas. So that way we can help better understand the price action and look for any signals, whether they're bullish or bearish, and give you guys some really good technical analysis. But before we do that, I have a quick slide presentation that we're going to go through, covering some of the news and some of the geopolitical things surrounding the price of natural gas. And what we'll do is we'll actually take a look at what happened and what was the result after the last prediction. Okay, you guys remember earlier last year in 2022, they were saying that there was going to be, a really big crisis in Europe over natural gas, and that they weren't going to have enough natural gas due to the whole Russia situation, as well as potential rising temperatures over there, or actually, I'm sorry, really cold temperatures over there, causing people to need more demand for natural gas. We'll take a look at how that actually played out and compare that to what they're currently saying right now in the news. So if you're new to the channel, make sure to smash the like button, subscribe to the channel so you don't miss anything. Any of these updates, I'm covering natural gas every single week and giving you guys some really good TA. If you want to jump straight into the charts, all you have to do is go ahead and fast forward a little bit to the second half of the video and you can get straight into the charts. Okay, so we'll go ahead and jump into the slide presentation now. We can take a look. And so China is reopening right now. Okay, everybody knows that. That's a big topic of debate right now, is how that's going to affect a lot of things. A lot of people think that that's going to cause inflation to go up, as China and the demand in China really could cause global inflation rates to really start to tick back up, and also US CPI. Right, so the headline here on CNBC this past weekend is China's gas crisis, right? And it goes into a couple things about it. And if you go to the next slide here, they're really trying to highlight the temperature thing. Now, remember how this turned out with Europe, okay? If you take a look, the way this graph is set up is above normal temperatures are going to be in this yellowish, color right here. You can see that most of Europe is at above normal temperatures, so they're not needing really, an excess of natural gas or using or an increased demand. Now, China, based on this graph, they're implying that the global temperatures in China are below normal and are really going to cause a possible demand spike in natural gas. But if you take a look here, this slide is titled "How Putin's Plans to Blackmail Europe Over Gas Supply Failed." And this was something that was a big highlight in the media, and it didn't really work out for a lot of natural gas traders, right? A lot of people got caught holding a falling knife, and they're seeing why natural gas has been nicknamed the Widowmaker. If you take a look here, Germany has more gas in storage now than it did before Russia invaded Ukraine. And the EU reliance on Russian gas more than halved through 2022. All right, higher prices and reduction targets pushed down EU demand for natural gas in 2022. And if you look here, this is when the start of the 15% EU demand reduction target. And 2022 is going to be here in red, and 2019 through 2021, the average is here in gray. And you can see that the average, the demand average, is much lower than it was in the previous couple of years. In 2022, EU wind and solar generated more electricity than gas did for the first time ever. So, the news was pumping that to a lot of people, and what they did was actually end up liquidating or rather giving liquidity to all of the short sellers. And, we saw a massive plunge in the price of natural gas. So being that they're pumping China, you need to do a little bit further research, right? So if you look here, Russia actually approved agreement on gas supply to China via the Far Eastern route, encouraging payments in its own currencies. According to Lin, the agreement is a further development of energy cooperation between Russian and Chinese companies, and the government officials have stepped in to help remove obstacles to cooperation, demonstrating the importance the two countries attach to energy cooperation. On February 4th, just a few days ago, Russia's state-owned energy giant Gazprom announced they had signed a long-term agreement with China National Petroleum Corporation to supply natural gas to China via the Far Eastern Pipeline. This is the second contract to be signed for Russian gas supplies to China, and it is indicative of the exceptionally strong mutual trust and partnership between our countries and companies. And if you take a look here, this article is giving you a little bit more of the truth and not so much of a bearish or the bullish outlook. And they're kind of giving you, some realistic expectations. So further support from weather may not occur until the last 10 days of February based on the latest models. The market is crashing for a good reason, says analysts at the short group. With little in the weather data to convince the market that polar air may return and stick around, the robust supply picture and lighter demand season ahead are formidable headwinds too. As such, gas bulls have to lay low and hope for a contrarian rally in the spring. And it kind of goes into seasonality, right? And you think about the seasonality of natural gas. So, we may be seeing a rally sometime soon. It just may not be as soon as you think it is, and there could be further downside before we end up getting any type of a push. So what we're going to do is we're actually going to head into the charts now, okay? Go over to TradingView, and we'll start here at natural gas UNG. All right, that's the first ticker that we're going to be looking at, breaking it down on the daily chart. And one thing that I want to highlight, if we zoom in just a little bit here, okay, is we have been rejecting our major Fibonacci retracement levels every single time that we've gotten a bounce, right? So if we zoom in some more, we can see here, all right, after summer, so in September 2022, we really started the downtrend and established that we were in a downtrend. If you take a look, what happens is we have our swing high to our swing low. We come down, we retrace up to the 61.8% retracement level, and then we continue that downtrend, okay? And we do this time and time again where we're rejecting the three major Fibonacci retracement levels. Now, if you're new to using the fibs, there's three most common and most respected. There are other levels, but as a beginner to the fibs, and really just as a general rule of thumb, most people focus on the 61.8, the 50%, and the 38.2, which is why I have those three highlighted in particular in this video. So if you look here, again, we rejected the 61.8, we came here, rejected the 50%, we rejected the 61.8% again. And so what we're looking for is we're just being realistic and saying, hey, if we do get some type of a bounce up, right, and let's say you're trying to play a long position and we do end up getting a rally, you need to be cautious up here at your three major Fibonacci retracement levels. The reason being is we've established that we're in a downtrend and we've been respecting that trend and continuing that trend after each major retracement. That doesn't mean that we can't get a reversal, okay? So, nothing moves in a straight line up or in a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower, all right? You can spot a reversal when you move down, retrace, consolidate a little, and then break through those retracement levels. If you break through the retracement levels, we could be getting a potential reversal where we could come up and test some of our previous highs. Now, we've got a few support levels, okay? I updated the support levels in the last video. If you look right now, we're testing the 821 support level that I gave in the last video. That's actually the current price that we're at right now. And that's from some lows from a few years ago, guys. If you take a look, 821 is all the way from the lows in December of 2020. So, UNG is really at some historical lows right now that we haven't seen in a very long time. If we zoom in on our relative strength index right here, you can see that we're in oversold territory. But as I've mentioned before, just because we're in oversold territory doesn't mean that it can't go lower. We've been in oversold territory since the beginning of January, and we've continued to head downwards. Now, something to keep in mind also is when something is making 52-week lows, it tends to make new 52-week lows. But we're on the verge of making 2-year lows, right? We just looked at December 2020. We're testing those lows right now. So that's kind of like January 2021. We're now in February of 2023, and we could be about to create new 2-year lows. So that's a pretty big deal. Now, I have a price target where I think we may see the bottom in, but this isn't financial advice, okay? This is just technical analysis. And what it is it's based off of a 3-wave move. So if we take out our tool over here, I'll show you guys the path that I think we could be heading on. All right, so we have our high up here, we have our move down, we have our retracement, okay, and then our wave C. All right, so we have an ABC possibly. Your wave C is going to be the 1.0 extension of A and B. So what that means is you would take basically your extension tool, you would track the highs here down to the lows and drag it up to your B, and that gives you the 1.0 extension of 752. So if we do end up breaking this 821 support level, okay, we could possibly be heading down to 752. So that would be an area where I would pay a lot of attention to. Now, if we zoom in a little bit, we can see that we've been respecting our support levels in every single one of the levels that I've given you guys, but they really haven't been able to hold up. We've just consolidated at those levels, right? We come down to our first level that was at 1167. We bounce, consolidate, and then what do? We flip it to resistance 3 times right here, and we move down to the next level. We test it as support a couple days, and then what do? We flip it to resistance right here. We come down, we test the next level at 904, flip that to resistance, and now we're testing our 822. So if this pattern is going to continue of really just breaking support and trending lower, most likely we're going to end up breaking that 821 and coming down and testing our C wave target from the AB extension at 752. Now, a worst case scenario is that we would possibly come down here to our 1272 extension, which would be about 287, but a lot of work has to be done. Now, there is potential we could be seeing a bounce here at this 822 or also the 752 level for a few different reasons, okay? We have a couple divergences going on, and I'll go ahead and highlight those right now. But if you take a look at your relative strength index again, and we actually come over here, and let me zoom in on the chart a little bit so you can see the lows. All right, and what we have is we have a low and a lower low on the price of the stock, right? So we have a low here. We clearly have a lower low. The stock is definitely in a downtrend, right? No secret about it. It's heading lower in price. But if you take a look at our relative strength index, we have a low, and we've really made an equal low over here recently, right? We did have a slight bullish divergence where we were creating a low and a very slightly higher low. And I said once we broke that trend line, most likely we're going to come down and test these other support levels, that's what we've been doing. But, you know, we do have a slight bullish divergence here. It's not a very strong one, but we have a low, we have a lower low, and we have a low, we have an equal low right here, okay? Now, on top of that, we did get a MACD crossover to the upside, and we have a little bit of a bullish divergence on the MACD as well. So if you take a look here, okay, the MACD is also kind of staying flat right here in a little bit of an uptrend, bouncing here recently, but compared to the low and the lower low, it is a slight divergence that we have on our charts here. So it's going to be interesting to see if this can actually play out and if we will get the bounce. If we do, remember, we have to be cautious if we start rallying up to our major retracement levels, as we've been rejecting those each time. That doesn't mean that you can't look for a breakout. Again, what you would look for is you would look for it to come up, consolidate a little, break and retest, and then continue up higher. All right, so that's going to be the really bullish signal that you're going to look for, on top of the few slight bullish indicators we have on the MACD as well as the RSI. Now, let's go ahead and take a look at Boyle real quick. Or let's actually go over the natural gas spot price, because it's a much greater example of how you can use these, you know, different divergences to really help you guys out in understanding some of the future price action. So I have lots of divergences highlighted here. We'll go ahead and take a look, and we'll start here on this one. Okay, so if you look, what we're doing is we're starting to make lows and lower lows, right, on the spot price of natural gas, right? So this is the actual price of natural gas itself, not one of the stocks. And you see we have a low, lower low. On our RSI, we make a low and a higher low. And then after we get that bullish divergence, we get a retest of our MACD line and we push upwards, right? Over here, we're making higher highs, but on the relative strength index, we're losing relative strength. We're making a high, a lower high, a lower high, while we're continuing to make higher highs on the price. That's a bearish divergence indicator. You could see some type of a pullback. And sure enough, we do get a strong pullback coincided with a MACD crossover right over here at this point. So, you know, there's multiple examples right over here, making lower lows, higher lows on the RSI, MACD crossover. We come up here, high, higher high, high, lower high, MACD crossover. We get a strong move to the downside. Then over here, what are we doing? The exact opposite: low, lower low, lower low, low, higher low, higher low. We get a push up. And we've been respecting these divergences many, many times. Now, if you take a look, okay, currently we have a low here and a lower low here, and we do have a low and a slightly higher low right here. So we have a slight bullish divergence, but we have this bearish divergence trend line on the top that initially caused this drop, where we have the high, 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 and then we have a high and a lower high. So if this thing does start to rally and the price of natural gas starts to rally, it really needs to break out past this bearish divergence trend line, come back, retest it, and push up higher. Otherwise, any type of a rally is most likely going to get slapped down by this bearish divergence trend line. Same thing on the MACD right here, okay? Not only do we have a slight bullish divergence, but we're looking to see if this thing is going to actually start curling above. It's really just hovering right at that orange line right now. No true signal of a crossover yet. Okay, and a lot of times you can get fake outs like this where it goes up and down, up and down. And whenever you see the MACD consolidating like this and giving these false signals, what you'll notice is that the trend continues. So here we were in an uptrend and the MACD was curling down below, back above, back below, back above, back below. Okay, and ultimately we just continued that trend in a choppy fashion versus a much more clean in one, directional side of fashion. So over here, if the MACD continues to just chop and go up and below, most likely we're going to see the price of natural gas continue to chop down lower in a much bumpier ride. Now, when it comes to the spot price of natural gas, we're at 265 right now. 243, 220, and 187 are going to be the major support levels below for natural gas that we could potentially come and test. Let's go ahead and hop over into BOIL now. I know BOIL is very popular. Now, a lot of people are doing this for, the sake of leverage. Don't forget about options, guys, okay? Using options is a really nice way to gain leverage. And what you can do is you can also hedge yourself with those options, right? So you can go long call options with a much farther dated expiration date, okay? And then you can take a smaller percentage of that position and put it in a shorter dated put option. So that way, if in the short term things start to fall and things start to collapse, okay, and your long dated call option, it will lose value, but that short dated put option should start to gain value in case the price of natural gas and BOIL keep on falling. Now, BOIL, all right, we just took a look at the spot price of natural gas, all right, and we saw that there is some prior support levels, meaning that it's not at all-time lows, okay? BOIL is in fact at all-time lows and continuing to make all-time lows on BOIL. So it's been a really, really tough investment for a lot of people. It's hovering over here in oversold territory. Again, just because something's oversold doesn't mean it can't go lower, but typically you want to buy something when it's oversold on the RSI and sell something when it's overbought on the RSI. That's just typically how people use it, but you have to keep in mind, the trend right now, the trend is your friend. And some of the other economic headwinds. As we took a look in that article earlier, it says that, bullers may need to strap up right now and really just hold on and hope for a contrarian rally. So ultimately, that's what you're going to be looking for. And BOIL just continues to make all-time lows. The spot price of natural gas has not made all-time lows. And also UNG has not made all-time lows. We're testing some of our December 2020 lows right now. And if we break those, there is a potential we could end up making some all-time lows on UNG. But if you look here, this just goes to show that BOIL, and a lot of people have been trying to go long BOIL due to some of the situations I spoke about earlier, where the news was kind of pumping it up and pumping up this whole European thing. And really, just ultimately giving liquidity to these short sellers who are pushing the price lower and lower on BOIL. So, BOIL is definitely the most bearish out of all of them. The other two haven't really made all-time lows yet, but BOIL has. So keep that in mind. Also remember what I said about options. Options are a great way to start hedging yourself, right? Even if you just want to buy shares of UNG and then, maybe grab a put option contract as a type of hedge. Again, not financial advice, not trying to tell you guys what to do, but really just give you guys some good, clear technical analysis, as well as update you on some of the news and possible geopolitical and really global stances on natural gas right now. Hopefully you enjoyed this video, and if you did, smash the like button and subscribe to the channel so that way you guys don't miss out on these natural gas videos. I'm doing them every single week.